Hey guys, this is Jim Merritt with QuickTrainer in beautiful Wilmington, North Carolina. Got an email from a client the other day, and I thought it was a good question, and I certainly understand their concern, and I thought it was worth sharing in this short video. So here's the situation. The client is in construction. They bought $500 worth of materials. And you can see it on this transaction right here in front of you. And don't worry about the dates. I don't know what dates they bought it, but you'll get the idea. But they bought $500 worth of materials, and they've coded it to some type of item. It may not be called construction materials, but it's an item appropriate for construction materials. And they have flagged that to go to this particular job. This is not the name of their client. This is a fictitious, well, actually, it's not a fictitious client because Jordan Spieth is a real person, but again, you get the idea. So they have flagged $500 to go to the Jordan Spieth kitchen remodel job. And if I look at a jobs report based on that date, okay, I can see construction materials $500. However, what happened is they took back $125 of that material, and instead of getting a refund for it, they received a store credit from Lowe's. So there's a couple things going on here. Number one is they want to subtract $500 from this job because they only spent, they want to subtract $125 from this job because they've only really spent $375 on this job, so we don't want to overstate that. In addition, they now have this credit sitting out there that they need to account for, and so that's an asset. That's all that is. It's an asset. So here's what I've done. I created another bank account called a clearing account, and this is common in the accounting industry. Okay, a clearing account is just so that we can account for transactions that are never going to clear your bank. And in a clearing account, there may be an exception or two, but for the most part, a clearing account's balance will always be $0. So let me show you what I did here. All right. On 8/22, I entered a transaction in the clearing account, construction materials, and I put a negative 125 in it, and I associated it with this customer's job. That's what's going to reduce this number right here, and I'll show you that that gets reduced. Okay, you can see that that number went down to $375 as a result of this transaction. And then I created this materials credit item, and let me show you how that's made up. Materials credit is right here, and so I point this account to, and we don't need that, that can be 0. I pointed this item to this account called Materials Credit, and it's an other current asset type general ledger account. Okay, and I also pointed it to the same account on both sides. So what that does now is it puts that Materials Credit as $125 into this account, into that materials credit account, and you notice I did not associate a job with it because right now that credit doesn't belong to any job. And if I look at a balance sheet, look at the balance sheet, there's my materials credit. So why is it an asset? Well, because it's money that the company has, they just haven't used it yet. It's no different than, cash that you have in your bank. It's money sitting in your bank, you haven't used it yet. This is a credit you have you don't have it in your bank, but this is a credit you have in your possession and you haven't used it yet. Okay, so there's the $375. If I look at a profit and loss report, I can see here that, and again, we would see a lot, in a real business, we would see income accounts and expense accounts and cost of goods accounts, etc. But I want to keep this really simple. you can see at this point that $500 that we spent at Lowe's is reflecting right here. Right there it is. Okay? But once I change this date to the date that I took the materials back and got that credit, it goes down to $375 now. And that's because when we look here, we can see the original $500, and then we can see the $125 credit. Again, that's this credit right here. Okay? So now what happens when the date comes and we're ready to use that credit? How do we handle that? It's actually pretty simple. I've already recorded a transaction in here, and you can see on 9/2 I took that construction materials, I bought more construction materials, in other words, for a different job, and I used that $125 credit, and I used that materials credit, and I reversed it by putting a negative number in there to reverse it, and I did not associate it with the job. Okay, so 9/2, if I move this to 9/2 right here, the balance sheet, you can see that the materials credit, it disappeared from the balance sheet because the balance is now 0. Okay. Furthermore, if I go look at, let's see, yeah, I'll have to go about this a different way. If I go look at a job profitability detail for this bath remodel project that I put that $125 to, you can see there's my $125 now that's being used. Now I realize, for those of you not used to this, might be a little overwhelming at first. So I've tried to move through things slow, and as you watch this video, I encourage you to, maybe the second or third time through, maybe you pause it and just set these things up exactly like I've illustrated here. Again, remember the real setup, because you would already have your items. The real setup is in this materials credit account and creating this new other current asset account. That's primarily going to be the setup that you should need to do, assuming that you've been doing this for a while. And just pause the video as needed, so that you can see the screens that you need, and set this up, and just try to follow the logic. If you have any questions, feel free to give us a call, 910-338-0488, or you can email us, info@quicktrainer.biz. Have a great day.